begin with a little clip. Here's Eric Clapton. Let's listen to the tension in this song. Do you hear that? This is like an art. This tension is from the heart. This is implied volatility. And then, bam. Implied volatility releases itself. And the dollars flow in like bam! That's how this works. Alright. My name is Fred Atwater, if you've not seen me before. And I'm going to talk about NFLX and a leap call diagonal setup that is an exploitive sort of technique for a number of different things, but in this particular case it's an exploitive technique for this thing called implied volatility, and we're going to exploit implied volatility and we're going to achieve this thing called crush. So when you accomplish an implied volatility crush, you actually sell a high priced option to the market, and then when the catalyst event, which in this case on NFLX is right here, it's that monster called earnings, and you're going to exploit the fact that you can capture dollars on that. I've drawn out what we've done here. We actually went long on this stock right here with a 1 contract spread on this. I was leading the market, and then today we had what some folks could call a bullish engulfing pattern. It's not quite what when you have this super pronounced volume based giant green candle embracing everything, but that one's there. That one's a bullish engulfing pattern, and it's bumping up there, and it's on volume. So there wasn't this weak buying activity that's going on. I think guys, we're gonna see that. All right, I'm not the guru. I could be wrong, which is why we protect ourselves in this case. Let me show you the risk analysis graph for what this present position that we happen to be in. Let's go over to analyze. All right, and I made a video a little bit before on what our NFLX position was. This particular ad that we did added 1 more contract to it at the cost of just under $10,000. So we're about $20,000 net into this event, if you will. And the profit we're seeing off of this so far sits right here at the intersection of the purple line and the current trade price, which is right there. So we're sitting at about $390, $400, something like that, in dollars. But what's the magic here? This baby right here, the difference between the purple theta line and the delta arc, or in this case it's become a delta arc, not a delta rooftop. The reason it's done that is because I've blended some strikes down here. I've blended a 350 strike with a 360 strike, and I've maintained 2 short strikes at 417.5 on this. The reason I do that with the 417.5s is so that I can control the delta on it, and I can also add this thing which in geeky terms would be called a declining basis hedge, meaning I sold it for a certain price, and the cost basis of it declines, it goes down, therefore in the future I can buy it back for less. And as long as the underlier moves up in price, which is what you see on these tick prices right here, okay, these are print prices of the underlier, 430, 440, 450, 460. As long as the underlier moves up in this case, I make money. All right, why? Check this out. Add all those numbers together, folks. That's a positive net delta, and I also, not displayed on here, but I actually have a positive net theta as well. I actually have quite a significant positive net theta, so much so that it presents itself in this manner. I am so happy to let this stock explode up to the 440, 450 range. because this purple line is going to rise. And why do I want to put that purple line there? Or sorry, why do I want to sell those front month short ATMs at the monies? Because I want to control my downside risk. All right, risk management is everything in the market. Let's say I have $1,000 stop loss right here. I can come right down here at well, actually that's not even that at expiration. This line's going to rise itself up here after the implied volatility crush. I'm going to say it's going to be right about here. So my underlier price is down at like 380 or so, something like that, before I start to hit a break even point. I have to see if I can move that over and actually see that point. Oh yeah, I can see that fine if I move that chart over. So let's say I had $1,000 stop loss, and let's see, after the catalyst this thing moved up. I just go to the $1,000 point right there, intersection, boom. What did I say? I guessed 380. It's about 383 or so on the underlier. That is fantastic. I have a superb amount of downside protection in this move that I can get out. I can escape. It's like my whoop, Fred was wrong. Let me stiff arm this problem and get out. All right. But what I have up here is a magnificent amount of implied volatility crush. All right. So that's literally free money. If I can score $2,000 just for setting up this particular trade, it's all in day's work, right? It's all actually in about 15 microseconds in my head because I can see these things work. All right, so that's Netflix, fellas, and that's the implied volatility crush on this chart. I don't know if I said it already, but I actually put a line up here that is expressive of my break-even point. It's a little bit higher than I was estimating there. That's at 385, 386, something like that on the underlier. And then a very way up here before we start to diminish out our profits on the trade. Your risk, guys, is down here. You got to understand that control of risk. All right, risk is down here. So if this pattern breaks down and starts to go to crap, that's your risk. You want this thing, which actually looks like a cup and handle to me, a mini cup and handle. You want it to do that right there, because this is mucho dinero if we go up there. All right, guys, thanks. I like to play the market like this guy plays guitar, and we're gonna let that tension build with implied volatility. That's emotional premium in the market, and we're trying to sell it. We go out and buy leaps because they're at wholesale pricing, and then we go back and we sell the front month to the retail public because they're much cheaper to me, because I buy them at a huge discount, and then I go back and sell them on the front month, and then the catalyst event that was causing that to drive up falls out, and we get music to the account. All right, that's how that works. Have a nice day, guys, or a nice night. 3